Hi there, welcome to Kneppy Invest. Quite a few years ago, and I'm thinking about maybe 5, 6 years ago, Karoon Energy, the focus of today's video, was an absolute basket case. The share price had gone down appreciably in the previous about 5 or 6 years. The company had plenty of cash, but they weren't quite sure what to do with that cash. Then they made a decision to buy some Brazilian assets, and things are going fairly well for this company. The last time I did a video on Karoon Energy, the share price was just over $1. So since then, maybe about 18 months ago, the share price and the valuation of this company has more than doubled. So I thought maybe it's a good time to have another look at Karoon Energy. Karoon Energy is an oil producer in Brazil. And when I say Brazil, I don't mean the country itself, the land. They actually have production, oil producing rigs, or whatever you want to call it, well offshore of Brazil. I'm thinking about 200 kilometers offshore of Brazil. They do have quite a few assets out there as well. And that cash flow or the cash is flowing into the company at a pretty good clip, and it might continue to flow into the company at a pretty good clip over the next 5 to 10 years. Now, the company has a fairly long history on the ASX. In fact, it listed in June 2004 as a coal seam gas explorer in the Western Gippsland Basin of Southeast Victoria. So somewhere along the line, probably about 10, 12, 15 years ago, they decided to change their business model. And I didn't want to really get into too much depth about when they decided to change, but they've gone from a coal seam gas explorer to a Brazilian oil producer. One of the large shareholders is Australian Retirement Trust with 6.2% of the company, and at a share price of $2.19. And have a look at their share price, because I actually haven't had a look at the share price of this company for about a week. The market cap is $1.2 billion. And as I mentioned before, over the past year to 18 months, the company's share price and valuation has kept on going up. Shares on issue 558, so nothing too low, not too high, probably about right for a company like this. And the ticker code could be anything else other than KAR. So I've already mentioned they have assets in Brazil, but 210 kilometers from the Brazilian land mass. So they have 4 assets out there in, I think this is the Santos Basin, or maybe it's just to the east of the Santos Basin, but I think it is the Santos Basin. 4 assets well offshore there. I'm not going to try to pronounce some of these. Neon, Clarita, which is a prospect, but they do have production and development in their 3 other assets. The current CEO of Karoon Energy is Dr. Julian Fowles. He's also the managing director. I'm not sure what the difference is between the chief executive officer and the managing director, but he's been in this role since the 27th of November 2020. And since he's been in this role, the valuation of this company has climbed, has risen. So you could say he's done a really fantastic job over the past 2 years and 2 months. But Dr. Julian Fowles has extensive experience in this area. He started his career with Shell International, where he did spend a lot of time in all around the world: Europe, West Africa, Australia, South Asia, and Latin America. And he also spent 5 years as the exploration and new ventures manager in Shell Brazil. And fortunately enough, he also speaks Portuguese, which is probably a good thing to have if the company is sort of based their operations in Brazil. And then after Shell, he joined a few other oil companies and then joined Oil Search and stayed with Oil Search for a few years until late 2018. He also has, because he is a doctor, a PhD from the University of Cambridge. More than likely that's for geology, because he does have a geology degree at the University of Edinburgh. He also holds a graduate diploma in applied finance and investment from the Australian Securities Institute, which is interesting. So a lot of experience here with Dr. Julian Fowles. And at this point in time, it does look like he is doing pretty good work with Karoon Energy. Now to the company's financial year 22 results that they did release to the market in August of 2022. So the company should be releasing the half-year results in about 1 month, or just over 1 month, in February, and everyone will be looking forward to those results, just like every other company on the ASX, or maybe that's just me. I'm always looking forward to when companies release their results in August and February. It's my favorite time of the year. Anyway, revenue 385.1 million. Now I have shown their profit as underlying, which is 89.6 million. Their reported profit was actually negative, and I will discuss that during the next few slides. In fact, the difference between the underlying profit and the reported profit is something like $200 million. Operating cash flow, 109.7 million. Free cash flow, 104.6 million. Not a lot of capital expenditure there, but they did spend a lot of money in regards to assets, purchasing businesses or something like that. Equity of 276.2 million and plenty of cash. In fact, they have net cash of 130.5 million. And the other thing to really focus on when it comes to this company, and probably most other mining companies, is just the production volume, capital cost, the realized price of the commodity they're selling, all those sort of things. So in this particular slide, a table 1 taken straight from Karoon Energy's presentation in regards to their financial year 22 results, might have been taken from their annual report, or maybe even from their annual general meeting. Anyway, the main things here is to look at production volume, oil sales volume, unit production cost, and net realized price of their oil. So MBL is millions of barrels, and that is per year. If you ever see BOPD, that is barrels per day. So production volume for 2022, 4.64 million barrels, up significantly from last year, which was 3.1 billion, so up by 50%. Oil sales volume up from 2.9 million to 4.54. Unit production cost fairly steady at 25.36. That should come down in financial year 23 based off their expectations. And weighted average net realized price increasing from 59 to 84.74. So if we look at the next bit of this particular financial summary, you'll notice here that the profit was, or net profit after income tax was negative 64.5 million, but the underlying EBITDA was 205.2 million. Underlying net profit after income tax, 89.6 million. Should also mention all these numbers are in US dollars, not Australian dollars. So you'll notice that the reported profit after income tax was negative 64.5, but their underlying profit after income tax was significantly higher, and actually, in actual fact, positive. So why is that? I'll discuss why in the next slide. They also mentioned here investment expenditure, 92 million for the Baina intervention and Patola capital expenditure. It's funny enough, in their financial statements, they said capital expenditure was only about $5 or $6 million. So that's something else to consider, that capital expenditure was a little bit more when they reported in this particular financial summary. So what is this underlying profit? Why should you probably focus on that and not the reported profit the company released? Because there is a big difference there. In fact, the difference is a company that was highly profitable to a company that was highly loss-making. And I can tell you this much, when they did release these results and analysis saw that loss of, what was it, $70 million or whatever, they wouldn't have really focused on that. They wouldn't have really cared this company was a loss-making company simply because of why it was loss-making, and it has to do with changes in fair value of contingent consideration, which amounted to 227.1 million. So there were total adjustments in the end to NPAT of 154.1 million. And in fact, their commentary says the reported statutory net loss was impacted by that $227.1 million increase, that's an important word here, in the assessed fair value of the contingent consideration payable to Petrobras, which amounts to $149.9 million after tax. The total contingent consideration recognized, which is dependent on future oil prices from 2022 to 2026, now reflects the maximum potential liability of $285 million. So this contingent consideration is all dependent on the oil prices. And what's been happening to oil prices over the past year? Well, they've gone up, and maybe they're being a little bit conservative saying it now reflects the maximum potential. So there is a possibility that if oil prices come back, they'll actually have to increase or decrease their contingent, whatever it's called, consideration, and that will have a positive impact on the profit and loss. So, what is contingent consideration? Hopefully, because I'm not an accountant and I actually did have to look this up exactly what it means. So, this is taken from Investopedia or something like that. It is the obligation of the buyer to transfer additional assets or equity interest to the seller of the business, usually cash or shares, if future events occur or conditions are met. And those conditions that are very important for Karoon Energy is the price of oil over the next 5 years to 2026. If the price of oil, which is the average Brent price in US dollars, is less than 50, they don't have to pay a single cent. But if it's more than 70, they have to pay $285. And in financial year 22, at the start of the year, the contingent consideration was only 71.2. They had to make that adjustment, $227.1 million adjustment to the P&L, and that's why Karoon Energy was loss-making in financial year 22, and it's not a cash loss. It's just an accounting loss at this point in time because we don't know what's going to happen to the oil prices over the next 4 years. In fact, if oil prices absolutely plunge, they won't own a cent, and in that sort of scenario, will have a positive effect on their profit and loss. But more than likely, Karoon Energy won't want the oil prices to fall because they'll probably make more profit if they remain elevated. Now to the company's Appendix 5B for the September quarter of financial year 23, the first quarter of the financial year, just to see how this company did progress or is progressing for financial year 23. Receipts to customers, 155.3 million US dollars, they report again in US dollars, and they were operating cash flow positive by $96.5 million. In this particular quarter, they did spend $62.1 million in capital expenditure. And even though they did spend that amount of money in capital expenditure, they still grew their cash on hand by about $24 million. And cash on hand at the end of the quarter was $181.8 million. And let's just have a look at some of the key stats, or whatever you want to call it, for the September quarter compared to the June quarter. So production rate, and they've got the BOPD, which is barrels per day, 14,000 barrels per day in the September quarter, up 18% from the previous quarter. Production volume for the whole quarter, 1.29 million, up 19%. Sales volume, 1.46 million, up 49%. Weighted average net realized price down from 107.4 to 96 because oil prices are dropping. So that was a decrease of 10%. But oil sales revenue up 33%. Oil sales cash proceeds up 49%. Increase in cash of 15%. And that's probably all she wrote for this particular slide. And the other thing here is undrawn debt. So they do have debt of $30 million and undrawn debt of $180 million. So that's also something to keep an eye on moving forward for this company, is whether they increase their debt or not. Another thing I do track for Karoon Energy is just receipts history. And we only have 7 quarters of receipts history because when they made the acquisition of these Brazilian assets, probably about 2-3 years ago, they went into production in the March quarter of 2021. So towards the end of 2020, start of 2021, just around the time that Dr. Julian Fowles became the CEO of this company. And receipts have been increasing slowly, but if you take away the most recent quarter, receipts have been going sideways, you could probably argue. But this one quarter just looks like now receipts are going up. So far in this video, I've just talked about the past, and the past is gone. So what about the future for this company? And fortunately enough, the company does have some aspirations, interesting aspirations for financial year 23. They do expect a significant increase in their production of oil from 4.6 million in financial year 22 to between 7.5 and 9 million in 2023. And the reason behind that is interventions and Patola targeting increase in total production to over 30,000 barrels per day. And not only that, they are expecting the operating cost to come down from $25 US per barrel to between 15 and 20 US dollars per barrel. And there is a reason behind that. I think that says here, with operating costs largely fixed, increased production following interventions in petroleum expected to reduce operating costs per barrel materially. And I probably would agree with that word, materially, in financial year 23. So have a look at those numbers this company has shown us in the past year. And then just imagine if oil prices stay where they are right now, the company or the cash flow coming into this company should increase considerably. And then the question is, what is a company going to do with all that extra cash flow that is coming in? And we can get a good idea what the company is going to do with that extra cash by looking at this particular table, guidance for key operational and financial metrics in financial year 23. I'm going to ignore the top part of this table because I've already talked about some of that. But in the second or the bottom half of this particular table, investment expenditure, we have a good idea of how the company is planning to deal with that extra cash. They are going to spend more on some of their projects. For instance, the intervention of petroleum projects, they spent $92 million in financial year 22. Now they're expecting to spend between 205 and 240 million. Last year on Neon evaluation, spent no money. In this financial year, they're going to spend between 65 and 75 million. And property, plant and equipment only spent $5 million, which is capital expenditure. And in financial year 23, they're going to double that to be between $9 and $11 million. So we get a good idea on what this company is doing. And they're going to spend more on these projects. And the reason I want to spend more on these projects is to increase their production in the future, in the next 5 or 10 years. So hopefully these investment expenditures come to fruition and are beneficial for shareholders in the long term. Now onto the charts for Karoon. I'm going to look at the weekly chart and then in this slide and then the daily chart, the next one. But if you look at the weekly chart over the past 10 years, you can just tell this company was a basket case for the longest time. The share price decreased from around $6 back in 2013 all the way down to a low of 40 cents at the bottom of the COVID-19 financial panic. But the sentiment in this company was really negative even before that panic. And then the fortunes of this company started to turn around. They bought those assets in Brazil. And to be honest with you, the share price of this company has been in an uptrend for the last 2.5 years. And it's looking much more positive right now. Sentiment is now has definitely shifted. And in fact, I wouldn't call Karoon Energy a cult stock just yet, but I am hearing a lot more chatter about Karoon Energy on all the investment podcasts I do listen to. If we went back to, say, 2018, 2017, there was no talk in regards to this company at all. No one knew what they were going to do with all that cash they did have. And eventually, when they discovered those Brazilian assets and they bought into it, it has taken time for the sentiment to start shifting. And now everyone, it seems like, is talking about Karoon Energy. And that's why the share price is going up. A lot more positive sentiment. And the share price is in a well-defined uptrend right now. And you can definitely see the positive sentiment and the uptrend in the share price when we look at the daily chart. In fact, this daily chart or this chart goes all the way back to August of 2020. So almost 2.5 years. And the reason I'm going that far back is because the share price trend and the sentiment started to shift around about August and September of 2020. Share price back then was around about 80 cents or even lower than 80 cents. So if you hopped aboard then, you have seen a triple bagger. Now, if you do look at this particular period of time, there was one segment in this period where it did look like the sentiment was started to shift from positive to negative, and that was in the middle of last year. So around March to about June or even July. In fact, the share price dropped from $2.40 in March to a low of $1.45 in June. And that was the bottom of the Australian market. So the bottom in the Australian markets coincided with the bottom of Karoon Energy. And since then, the share price has rallied quite nicely. And back towards the end of November, we did see the share price of Karoon Energy reach a multi-year high of $2.45. Share price has pulled back a little bit. So it's really interesting to see the share price of Karoon Energy go up and up and up, even though oil prices actually in a downtrend right now. So that means there is a little bit of a disconnect between Karoon Energy and the price of oil. And I think one of the reasons behind that is the expansion in production for this company over the next few years. That's all I have for this bit of an update to Karoon Energy. I am not a shareholder of this company, and to be fair with you, I don't know as much about Karoon Energy as some others out there. So if you are a Karoon Energy shareholder or you know a lot about this company, I'd love to hear your thoughts on Karoon Energy. So leave those thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.